We think that the pilot plant that we're running right now and the results that we hope to put out here at the latter part of this year or early next year will conclusively demonstrate that the metallurgy here is not a defect. It's rather a significant advantage, and demonstrating that through a pilot program, I think, is something that you would more typically see at a much later stage of project development. We're doing it now.
The Financial Survival Network. Now more than ever. The Financial Survival Network.
Welcome. This is Financial Survival Network. I'm Kerry Lutz, your host. Well, want to bring you an update from a sponsor. I know you've been waiting for it anxiously. I'm talking about FPX Nickel, and CEO Martin Turenne is here with us now. Martin, it's great to see you. So lots been happening. When we last spoke, nickel had gone parabolic. Now it's settled down into today it's around $11 a pound, and copper trading around 3.5. We're getting back to historic ratios. Can you give us an overview, 30,000-foot view of the nickel market and what's happening there?
Yeah, great to talk to you again, Kerry. So, yeah, we've talked in the past about this idea of sort of a nickel to copper price ratio. Historically, that's been in the range around 3-to-1. And that's back to the levels that we find ourselves at today. We'd been under that level for many years due to some underperformance and some oversupply in the nickel market. Last year was very strong. 2021 was extremely strong for nickel demand. We've seen that soften somewhat here in 2022. The market is expected to be somewhat oversupplied this year. But despite that, we've continued to see very strong nickel pricing. And I think a lot of people are looking out ahead and seeing that the market, that there are not a lot of new projects in the pipeline, certainly outside of Indonesia, that would service the stainless steel and the EV battery market in North America and Europe. And so despite the market being in oversupply this year, we still see a very strong price. One that I think that allows consumers to continue to kind of model in continued nickel consumption going forward, but allows producers to be making a lot of money and allows project developers like FPX to really have a very strong basis to continue to advance our projects.
Right. And we can see that in the nickel price for sure. When we last spoke, there was kind of a paradigm shift going on in nickel, as well as other what we would call strategic or vital metals and minerals. And that is end users actually making investments in the sector to ensure supply down the road. Still taking place?
Yeah, very much so, and really only picking up pace. So for FPX, over the last 18 months, we've been in conversations with a variety of the chemical companies, the battery companies, and the automotive OEMs, all of whom sort of sit downstream of us in that critical minerals supply chain. And the trend we've seen here evolving over time, and those groups are becoming far more willing now to realize that if they're going to get nickel offtake for future supply, that they're going to have to make upfront investments. We've started to see groups like General Motors and Stellantis actually make equity investments now in junior companies that are developing lithium and nickel projects. And based on the tenor of our conversations with those types of groups, we certainly expect FPX to be front and center in those conversations going forward. Those are really the table stakes now. Those groups have to start to invest upstream to secure their supply chains. You saw in early September, the Volkswagen CEO was in Canada, very explicitly on the record saying that Volkswagen needs to invest in Canadian mines and Canadian mining, nickel mining companies in order to secure their future. And we continue to expect to see that occur going forward.
Right. And one other thing is the implications of the Inflation Reduction Act. We were talking earlier, that's having a profound effect because on several fronts, money is available for the needed studies, but perhaps even more importantly is you see a proliferation of battery factories on the board and starting to happen for the United States. So I'd imagine that this is going to make a big difference for FPX in the near to medium term?
Yeah, it'd be hard for me to overstate the importance of the Inflation Reduction Act for critical minerals projects developers in Canada, in the US, and in Australia. It's something that I think the market is still sleeping on. So the implications are really driven by the fact that the IRA ties the EV subsidies. So up to $7,500 per vehicle is available as a subsidy from the federal government, but only for eligible vehicles. And vehicles are only eligible if the materials that went into building the batteries come from either the United States or from free trade allies like Canada and Australia. So what that means is that Chinese derived material or material that's derived from Russia is not eligible. Now, when you look at the global nickel market, China and Russia effectively control about 2/3 of global nickel supply, if not more. And so it really means that there's going to be a premium placed on nickel supply that's coming from outside of those countries, from places like Canada and Australia, to feed into the EV battery supply chain. So the subsidy and the implications of the subsidy are very important. As you mentioned, the US government is also, through the Department of Energy and the Department of Defense, going to be providing significant amount of funding, both in terms of project finance to facilitate the funding of the construction of these critical minerals projects. And also what we see more recently from the Department of Defense is they're earmarking a significant amount of funding in the hundreds of millions of dollars to co-fund feasibility studies on critical minerals projects, not only those located in the US, but also including Canada and Australia, which are both have been deemed domestic for the purposes of that Department of Defense funding. So these are all profound things that will serve to lower the cost of capital for companies like FPX and will be an important funding source for these types of projects going forward.
And evidently, the act is such a good deal for battery manufacturers and EV manufacturers that projects that were taking place like in Germany and other places, manufacturing of batteries by Tesla and others, is moving back to the United States to get that tax relief, which it's got to be profound.
Yeah, I mean, what you see here is that China really took the lead on the development of the EV battery infrastructure many years ago. The rest of the world is playing catch up. And the way that China asserted that kind of dominant position was really, as a function of their central planned economy. And what you're now seeing is governments in the Western world are starting to employ some of those same tactics in order to kind of to elbow out the competition and to reassert dominance in that supply chain. For those who we could have a discussion on whether that's the correct thing to do from a political standpoint, but that's definitely the way the winds are blowing, and governments are going to be, I think, incentivizing industry to set up shop in their countries very aggressively.
It's the same thing with EVs. We could have a political debate on the efficacy, the wiseness of investing in them, but we're past that. All right. It's a fait accompli. That's the way the world's heading. And when you add these incentives in, then North American production, as well as Australian, becomes a foregone conclusion.
That's right. It's happening. The wave is moving. First started in China, then in Europe. Now it's cresting upon the shores here in North America. At some point, with the subsidies, we'll reach price parity on a sticker price basis, and then eventually, even without the subsidies, we'll reach price parity, and the EVs will be totally dominant.
Yeah, so it's going to turbocharge the entire industry. Let's face it, nobody's subsidizing ICE vehicles at this point. So let's bring it down to FPX. You've got some news coming down the pike. The van project, as well as feasibility studies. Tell us where you're at.
Yeah, so there's a few things that we've been working on recently. So, one of the more notable sort of pieces of news in September, early September, we put out a news release presenting the results of a scoping study that shows that we can develop the world's largest nickel sulfate plant or refinery. So nickel sulfate is the key nickel chemical that goes into the cathode of the batteries. So that was a very, very significant announcement from us and really points the direction for project development going forward. Upcoming here over the coming days and weeks, we expect to be able to announce a few things that I think are important catalysts. The first is drill results from an aggressive step-out program at our new Van nickel discovery that we made last year in 2021. We did a step-out program here in 2022. Very excited to be able to release the results of that step-out program here in the days and weeks to come. We also have an updated mineral resource estimate for our Baptiste deposit. That's the main deposit that underpins the economics of the project. We envision the opportunity for a higher grade to be demonstrated in that, and that's going to be a significant driver of better economics for that project going forward. And then, ultimately, the biggest thing that we're working towards here over the next couple of months is the completion of expansive metallurgical test work, including the running of a pilot plant processing around 18 tons of material from our Baptiste deposit. We view that in some ways as the most significant piece of news in the project's history, really validating the flow sheet to recover high-grade nickel using a very simple process. And so that's a major catalyst that we would point to here going forward.
And that's a non-smelter based process, right?
Yeah, it's a process that really relies on conventional, technologies that are employed widely in the mining industry, magnetic separation and flotation, to produce a very high-grade nickel concentrate. So a concentrate that has a nickel grade in excess of 60%. Most nickel concentrates produced by other projects are in the range of 10 to 15%. And what that high grade and high purity allows us to do is, as you mentioned, to bypass the smelting and go directly into the end use, either in the stainless business or more likely in the EV battery business. And so bypassing the smelting means a cleaner process and one that allows us to yield a much higher revenue rather than having to deal with that smelter middleman.
All right. So let's talk about valuation. Stocks bounced around a bit, especially after the parabolic move, the short squeeze in nickel. How do you see the valuation in terms of other development stage companies like yours, and in terms of net present value of your deposit?
Yeah, I mean, I think, like most CEOs, we kind of think we're deeply undervalued, and I think that the metrics certainly support that. In our case, our current market capitalization is in the region of 100 million Canadian dollars. The project has a net present value, as demonstrated in our 2020 PEA, of over 2 billion Canadian. So we trade at a multiple of about 0.05. So our market cap represents only around 5% of the after-tax net present value of the project. Typically, what we're seeing for peer companies out there is that they're trading in a range of more like 0.15 to 0.2, and sometimes significantly higher than that. So we think that the de-risking work that we're doing on metallurgy in particular, which has been an area that people have always expressed some skepticism around, we think that the pilot plant that we're running right now and the results that we hope to put out here at the latter part of this year or early next year will conclusively demonstrate that the metallurgy here is not a defect. It's rather a significant advantage, and demonstrating that through a pilot program, I think, is something that you would more typically see at a much later stage of project development. We're doing it now to really check that box and to be able to move forward and deliver our next major milestone thereafter, which would be a preliminary feasibility study in 2023.
So that should silence the skeptics then, huh?
Yeah, I mean, the skeptics are skeptics on metallurgy who tend to not be metallurgists. If you actually show the flow sheet and our test results, particularly sort of in a data room or a confidential environment to metallurgists, right across the board through all the due diligence reviews that we've done over the course of the last year or so, there's been very, very positive feedback. What we need to see is now sort of generalists also seeing test results and being able to discern that what those metallurgists that we deal with as third-party due diligence reviewers, what they see is what generalists reading our news releases should also see, that this is a simple process, delivers high recoveries, and produces a very, very high value product. So rather than sort of defending the metallurgy on this project, we're actually in a position now to play some offense and to highlight that it's a distinct advantage that we have.
And that, all other things being equal, could be the very catalyst that really moves FPX ahead.
Yeah, I think news on metallurgy is huge, and again, we always have kind of a number of conversations going on with very large sort of strategic counterparties. To the extent that we're able to come to agreeable terms for investment from a counterparty like that, we could see that as being a tremendous source of endorsement and validation for the company and for the project. And a lot of people who may be sort of sitting on the sidelines waiting for that, I'd suggest you might prefer to own the stock before news like that comes out as opposed to after.
Right. What's the timetable for the pilot plant?
We would expect the pilot plant results to be out either in December or at the latest by early January.
So it's right around the corner.
That's right.
All right. Well, hey, assuming they're as good as they sound like they're going to be, 2023 could very well be the year for FPX. So, hey, you want to find out more about it, then you got to go to the company's website, fpxnickel.com, sign up for notifications so you get the latest on the pilot plant and its results. The ticker symbols in New York, FPOCF, and of course in Canada on the venture FPX. Martin, appreciate your taking time out, and we will definitely be touching base with you after the first of the year. Best wishes for the coming year, and we'll talk to you then.
Yeah, same to you. Thanks, Kerry.
The Financial Survival Network.